Guys, how are we all feeling today? We've got a bit more of a green day in the markets today. Things are looking a little bit more positive. However, we're not out of the woods yet. So, cryptocurrency, I talk about it each time, guys. If you haven't got an exit strategy, if you haven't got a plan, you're probably not going to be successful unless luck comes into it and you are lucky, guys. Stick a lottery ticket on, you can win the lottery. But what I'm going to do in this video, guys, is talk about when a strategy throws you a curveball, something happens within that strategy that doesn't allow you to take any profits and what the implications are of that. And we're going to be talking about Kadena in this one because I was talking about Kadena on the channel at 44 cents. And look what happened, guys. 342% to the upside. 342% to the upside within such a small range. That's not bad, is it? What happened next? Because this was my investment pot. So I've held it. I can't scale out until I get a break and close of total 3. 76.10% to the downside. So make sure that you got a strategy. Make sure that you understand what your strategy is. But what I'm saying, guys, it'll still throw you curveballs because I'm pretty much where I'd started. So how would I do things differently this time on Kadena? And how have I learnt my lesson? Right, okay, so the good, the bad, and the ugly, guys. That's something that I've done wrong. How would I do it differently next time? We're going to analyze Kadena together, but we're going to look at what current price action's telling us, where we are in the range, how to take advantage of the top of the range the next time it hits the top of the range, and what I would do differently next time. Because everybody knows I need a total 3 break and close above the previous all-time high before I can start scaling out. Because I needed that, and that hasn't happened, that didn't allow me to take profits on Kadena. So there's a couple of things that I can implement straight into the strategy, which would allow for a percentage of allocation at the top of the range to be taken off when Kadena hits that again. So Kadena is currently trading at 48 cents. This is a new platform I'm going to be using, guys. I'm familiarizing with this platform with my analysis at the moment, and I'm going to be working closely with these guys. So you're probably going to get some interviews. You're probably going to get a lot of people coming onto the channel, demonstrating lots of different things, giving us lots of different alpha across lots of different narratives. I'm a TA guy, guys. We want to bring other people on there that can do news, fundamentals, consultancy services, all these different products I want to bring to us as a community. I'm not going to give you leverage. I'm not going to give you things that are going to risk losing your capital, guys. This channel is going to be about wealth preservation. It is a crypto channel. Don't get me wrong, guys. Crypto's high risk, crypto's volatile, but I've got a belief in the system. Am I going to hold the system for 2 years, 3 years, 4 years as far as crypto is concerned? No, guys. I want an exit strategy. Am I going to revisit crypto at a different time? 100%, guys. Will I be fully out of the market at any given time? Probably not, guys. But if I'm in Bitcoin during a bear market and I'm holding Bitcoin during a bear market, which was a long-term hold from the previous market, then I'm happy, guys, because it means that I'm not converting that Bitcoin, which means it's not a taxable transaction. So what I'm saying is I'm expecting to sell nearly all of my cryptocurrency. That's part of the exit plan. But we can implement things into the exit plan. We can implement things into the exit plan like when something's at the top of the range and something gets a 3.5x, a 2.5x, why not take 25% off the table? Why not take 50% off the table? Because you would be at resistance. So this is going to be, this is the max data app. This is what we're going to be integrating into the channel as part of an additional narrative to build thesis on top of the weight of price action from my other charts. So there's a couple of things here, guys. Buy opportunity, it's saying 60% down here and 51%. It's got tokenomics. Get my words out there, 31%. So because it's a proof of work, sorry, that means that it's being actively mined. And the more that it's actively mined, the more that will be released in circulation. Similar to Bitcoin, guys. So what does Kadena look like? This is Kadena now. What can you recognize now? This is a long accumulative range, guys, and this is the weekly chart. This long accumulative range lasted for, currently, 144 bars, which is 1,008 days, guys. Hasn't broken to the upside in 1,008 days, hasn't broke to the downside in 1,008 days. So what does that do? Gives us additional confluence. There's a high probability it's not going to break to the downside. There's a high probability the upside is going to act as resistance. So what we'll do is we'll build in these lines and then we'll have a look how big this range is, how to take advantage of this range, how to do things differently this time. So there's the bottom of the range. There's the top of the range. Do it to the candle close rather than the wick because the wick is a rejection point. So there's a less probability that it's going to come back up and take the wick. It's a higher probability it's going to come out and take the body. So that's the range. We'll measure the range now from the upside or from the downside to the upside. We are at 345%. So it's all a case of risk. It's all a case of reward. What is your risk and what is your reward? Where would you put your stop loss in this instance? Let's have a look. Let's stick our risk to reward tool on there. This is the important thing. From where price action is now, what we're doing, we'll just get rid of the indicators for now. What we're doing is we're looking for the maximum reward. The maximum reward is the top of the channel. Where's your risk? Below the channel. Now, that's a 6.96, 7 to 1 risk to reward. So you've got a 7 to 1 risk to reward here. Now, this is the stop loss. Now we zoom out and we zoom out and we zoom out and we zoom out. Now, one thing that you can tell here is that stop loss hasn't been broken since the start of this range, November 2022. Sorry, October 2022. So it hasn't broken to the downside since all of that time, guys, over 1,000 days. So what's the chance of it happening again now? If it does, that means you probably want to be stopped out. That's why you've got your protections in place. Remember, if you look after the risk, the reward will look after itself. Getting stopped out a couple of times here, guys. If that did happen, it hasn't happened for over 1,000 days. If that happened and you got stopped out, that means that you're stopped out with a small position. This is the upside. This is the upside. All of this is the upside. This is the risk. And you need to be thinking about that, guys. Let the risk look after itself, or you look after the risk, should I say, and the reward will look after itself. So from a risk to reward perspective, this is looking really good. Remember, each one of these candles represents 1 week of price action. This candle closes in 1 day and 14 hours. If you can get anywhere near the bottom of this range, it's not to say that it's going to happen, 40 cents. If you can get to the bottom of that range, that is probably the best buy in over 1,000 days. Other than this one that we got that we rode all the way to the top and then rode all the way at the bottom again. So basically, is now a good entry? Can it pull back? That's the weekly chart. We'll delve into the daily chart and then we'll have a look at the indicators on the higher time frame. So you can see on the daily chart, we've come down. We've got a volatile spike here. That's indicating buy action. What happens when you get a volatile spike? Quite often that'll come back and get filled. So there is a chance that it is going to come down here. There is a chance it'll come down here. However, it's worth asking yourself, and none of this is financial advice, guys. I'm just showing you charts. However, does it really matter whether it's here or whether it's here, is what I'm trying to say. Risk to reward is always going to be big there. You always know where your stop loss is there because that's the bottom of the range. It hasn't been broken for 1,000 days. And how would I do things differently this time? I would be taking profit at the top of the range, regardless of whether total 3 broke. Total 3 is going to be my main indicator, guys, to start scaling out. Total 3, once we get a break and a close of all-time high, that's when I'm scaling out the market. And I might get hate, guys, during bear markets when people hate crypto, when people are losing money. But I'll tell you something, I'll get more hate when I'm scaling out of a position, when the market's pumping and the market's pumping. I'm expected to do that, guys. But if it means that I'm going to get a community out of this that is going to be, or have a higher probability of success, because we understand risk management, we understand markets don't move forever, we understand that we're not going to be in crypto for the next 4 years or fully in crypto for the next 4 years, because that is a recipe for disaster. What happens, guys? What happens when you're in crypto for 4 years? Let's just use this as an example. $9.62, bear market low, 35 cents. That's what can happen in a bear market, and that's what happens to pretty much every single cryptocurrency out there. So you be prepared for that, guys, and make sure that you have got that exit strategy. But what I'm saying is sometimes things can go wrong. Having a plan, having a strategy is all well and good. If everybody had a plan, everyone had a strategy that was successful, guess what? Markets would just go up and up and up, and they can't sustain themselves. Unfortunately, for every winner, there's going to be a loser. And unfortunately, the retail are on the back foot, guys. The smart money know where the money's going to lie. The smart money know where the flow of money is going to go. And when the flow of money is going to go, we need to understand that we need to move with the smart money. From a TA perspective, this is looking good. What have we got here? We've got a bit of a divergence. Let's have a look at this. So we're down into the daily chart now. We've got a divergence. Now, one thing to remember on divergences, when you're looking at wicks on divergences, the way that they play out is the candle close is the important one. So we're looking at the candle close, and the RSI represents the candle close. So if we pull the RSI up now, you can see we've got a bullish divergence. So we've got a bullish divergence. You can tell we've got a bullish divergence because we've got a higher low here, and then we've got a lower low here. So that's looking like it's going to bounce. The next resistance point here is going to be this 200 daily moving average. That's sat at 73 cents. So expect that to act as resistance. However, guys, once we get above this, what happens when you're above the daily? Things turn bullish, things look more positive. If we come back and retest the daily, I'm expecting us to come back and retest the top of this channel. So that's what I'm looking for, guys. That's how I would do things differently. Would I scale out all my position? No, guys, because my main strategy is to start scaling out when I break and close total 3 from the previous all-time high. So I'm happy to take a position out, happy to take 25% out. What's the power of taking 25% out here? If you've put in, that's 50 cents. This is nearly $2, 175. So if you put in, for instance, $100, you put in $100 here, and then you take out your 25%, you're pretty much nearly, not quite, you're nearly taking out your capital at this level and letting the rest to ride. So that's a powerful tool, guys. If you can take your capital out at a certain level by just taking out a percentage of your capital, if you've got conviction that we've got an alt season, conviction that we've got a bull run, conviction that the market sentiment's right, then that completely makes sense to me. And what it does is it allows you to protect yourself, From a trading perspective, guys, one thing that you can do to protect yourself along the way, once you've started putting in these higher lows, we talk about it time and time again, trailing stop losses. Once you put in a higher low, you take out this previous high here, then your stop loss goes up here, trades in profit. That means you're not going to lose out, guys. You're always going to be in profit. And then what happens? Trend's your friend till the bend at the end. You put in another higher low, then you put up your stop loss. Each time you're putting up your stop loss, you're in profit. And until you get to this point here, until you get to whatever point it is, to be fair, there's the other higher low in profit. Then this is the powerful thing, guys, because the trend is your friend till the bend at the end, but ultimately the trend doesn't just continue to the upside. When it comes down, bam, guess what? Your stop loss was previously, get this back down, your stop loss was previously down here. So you would have made that move all the way up, just like I did here, all the way up, all the way back down. So by trailing your stop losses on the way up, what I'm saying is you're cashing in profits, you're cashing in profits, you're cashing in profits. Bam, market reverses. Guess what? You're in profit. It's a positive trade. So that's one way that you can play it from a trading perspective, guys. But ultimately, just think to yourself, you have an exit strategy. Things don't play out all the time. It's a game of probabilities. But if you have that exit plan and you've got some kind of idea how you're going to plan to scale out of the market, then you have got a bigger chance of success than the rest of them that are just watching influencers saying, hold for 2 years, hold for 3 years. This one's a 5-year hold. This one's a 10-year hold. This one's going to take over the market. Guys, even big, massive shares like Tesla drop 60%. Imagine what it does to high risk cryptocurrencies. A lot of them don't even survive. So it is all about risk management on this channel. That was a bit of a rant. That was a bit of a long-winded way of saying it. But what I'm saying is Algorand looks good. Kadena looks good again to me. So if you did enjoy this video, let me know in the comments what you want me to cover next, and I'll see you in the next one.